So let's start off with something that's gonna annoy the listeners, and that
Okay.
is what I teach in my course, How to Start Building Your Wealth Investing in the Stock Market. Is you won't get rich in the stock market.
Wow. Hey, friends, welcome to Go for 10. If you are actually achieving less than you know that you are capable of, then Go for 10 is for you. Our goal with this show and company is to bring you the practical tips, the how to's that actually work so that you can take action and have success and happiness in your life and business. We are confident that what we share works because we only interview the people who have actually done it, since the fastest way for you to get to the next level in your personal and professional life is to follow the people who have been there and done it. Our expert guests fearlessly challenge the status quo and outdated paradigms to achieve results that are way beyond the average. Stay tuned for today's episode if you want to go for 10 in your money, finances, and investing. Great. Our guest today is an award winning analyst, investing expert, and public speaker. He has a research company that provides institutional and high net worth investors with ready to invest stock portfolios that aim to beat the benchmark through superior stock selection. While previously head of research at CLSA, he was voted number one analyst in Thailand in the Asia Money Brokers poll for 2 years in a row. He was also voted number one analyst in Thailand in the Institutional Investor magazine All Asia Research Team report. After losing almost everything in 1998, he was able to claw himself back and uses those experiences to help others to win. He helps institutions and individuals grow their wealth by investing in the stock market. He created the Valuation Masterclass, which is the complete, proven step-by-step guide to move you from novice to valuation expert. His Accelerator Value Program workshop helps management teams urgently increase the value of their business using a simple one-page financial scorecard that has no financial ratios. He has several 4 and 5 star rated programs on Udemy, including how to start building wealth, investing in the stock market, 12 steps to your financial independence, and how to become a great presenter and increase your influence. He does the extremely smart thing of learning from other people's mistakes and the extremely noble thing of sharing this information to help others avoid making these investing mistakes. The worst podcast host of the My Worst Podcast Investment Ever podcast, Dr. Andrew Stotz. Welcome, Andrew.
Wow. Thank you very much for having me on the show, and I'm really excited to bring everything I've learned to you and your audience. So let's go.
Absolutely, Andrew. And, one of the things I want to start off with is, the story, I guess, of how you came up with the worst podcast ever or the worst investment ever. Was it because you almost lost everything in 1998?
Mm. Well, I mean, I've been through my ups and downs like everybody, and I always wanted to do a podcast in the world of finance since that's my wheelhouse.
Okay.
Unfortunately, when I looked at the world of finance and looked at the podcast, they were very good and they filled a really good need. And I enjoyed listening to a lot of them. And I had to ask myself the question I think we all have to ask ourselves: can I beat that? And the answer was no.
Okay.
I'm sitting in Bangkok, Thailand, and there was no way I was going to be able to get the guests like some of these amazing shows are getting in the US. So I had to come up with a different angle. So my first step was to do nothing. I
Okay.
listened, I thought, and then one day I listened to a podcast called My Worst Interview Ever. And when I heard that podcast and I heard some of the people I really liked talk, and I was like, how did they get these big name guys on here? And I realized that people do like to talk about their situations where they lost. I mean, obviously everybody loves to talk about their winners. So I sent a message to the guy that was running that and said, I want to use my worst investment rather than interview ever. And that's how it came. Standing on the shoulders of giants is what we're also doing, learning from others. So that's where I got the idea. I sent out an email to my followers, and to
Okay.
my surprise, I
Mhm.
asked them, could you tell me one story of your worst investment ever? And to my surprise, I got 500 written stories. And that's how the podcast was born.
Wow. So I guess out of that 500 stories, and I think you have over 120 written letters to you, I'm sure you would have distilled down to certain ways that typically people would lose money. I think you have 6 ways that
Yep.
people lose money. Would you like to share those 6 ways with us? I'm sure some of us
Yeah.
could identify with it.
Yeah. For those people who are listening here, I mean, we can go through this list really quickly. And chances are you could probably check off 1 or 2 as we go through it. So I'm just going to go through it really quickly. The first, number 1, biggest reason why people lose their money is because they fail to do their own research. The first, number 1, biggest reason why people lose their money is because they fail to do their own research.
Okay.
The second most common reason is because they fail to properly assess and manage risk. Manage risk meaning when they're owning it, now what do you do to make sure you don't lose it all? Assess meaning you're judging it before you get into it. The third most common, so it's less common, but it is common, is driven by emotion or flawed thinking. These are all our behavioral and mind biases and mistakes that we make. And number 4 is just simply misplaced trust. They just gave their money to the wrong person. In fact, it's shocking. A 75-year-old friend of mine said, I've heard about this thing called blockchain on the internet, and some guy's talking about it, and can you help me put my money in it? And I thought, you're 75. No, I can't help you do that. He misplaced trust. He is an expert, me, as a friend. But instead, he got seduced and he misplaced trust. Number 5, failed to monitor their investment. How many people listening to this, they gave their friend some money to set up a restaurant, and then they didn't follow up on a consistent basis without follow-up. And the final, 6th one is really a separate one. It's a separate category because I just couldn't figure out how to do it, how to put this in the list. And so I decided to put it as its own, and that is invested in a startup company.
Okay.
Ladies and gentlemen, a startup company is the highest risk thing that you can do, and many of my guests have lost it all doing that.
Wow.
And that's the
Okay. That's amazing, there, Andrew. And you obviously are a research expert, and your number 1 there was about research. Now, what I find, sometimes, like when I hear people say that word, I get scared genuinely because I think that, and what it does, the results, at least that I have found with people, is that they do nothing at the end of the research, primarily because I think research is a skill, obviously, and I think it's your number 5 or 4 about trust. What is the trusted research? So, and I'll give you this text came into me just half an hour ago about a friend, a longtime friend, Robert actually is his name, and we've been chatting about investment for over 10 years. So sent me a couple messages some time ago to follow these YouTubers to kill the stock market. Okay, and I said, well, the people that I follow and I listen to, and a couple days ago I had another interview with another investment expert, and they talk about investing in portfolios. And this is exactly what Robert said to me. He said, Shane, that's average thinking, which could never beat the market. I strongly disagree. Okay, and I know Robert researches a lot. So what would you say to Robert? Like, how do you go about doing that research? How do we build those research skills?
So if Robert came to me and said, I want to be the fastest runner in the 100 meters in the world, I want to win the Olympics, what would you say? You would say, well, you haven't really run, and you haven't really practiced, and you haven't done the work in order to get even to win your country or your city
Yes.
or your age group.
Yeah.
And why would investing be any different? It isn't any different. It requires work. Now you can try to take the shortcut, just like many people do about nutrition. That my mother lives with me, and she came to live with me when she was 78 when my father passed away. And I decided to try to figure out if we could get off of all of the medications and do with nutrition what we were doing with medication. But that took a lot of work. It took research. I had to read a lot of books. I had to go through it. And you also see why people don't do it.
Yeah.
So the answer to that is simply there. It's too aggressive to say that's average thinking.
Okay.
But also, I just want to step back in one little thing, because I don't want people to miss this. There is one surefire way that people can build their wealth in the stock market, and that is to have their money in the market for decades. That's it, little thing, because I don't want people to miss this. There is one surefire way that people can build their wealth in the stock market, and that is to have their money in the market for decades. That's it. If you're a young person, you have time on your side, have your money in the market for decades, and then that money will compound over time. So that is one surefire way of doing that. Now, there's a lot of other things that I can share with you, but maybe you tell me how you want to go at it. But I love this topic, and I know I can bring value to people to how do they start thinking about investing.
Yeah, and I think that's a great place to start, Robert. And sorry, Andrew, I was thinking about Robert
Yes,
so much.
exactly.
Yeah. So, how would you firstly define financial independence?
I mean, in my case, the way I define it is that you can live off the income or gains, let's say, of the money that you have. So, and that's hard. That takes millions of dollars to be able to say, I just live off the income that comes in.
Yeah.
And there's one of the reasons why there's one huge misconception that people have, and that is even financial people kind of forget this. A lot of people in the world of finance like to present a chart that shows the compound effect, the exponential rise in your money in the later years. You leave your money in for a long time. I've just told you, if you leave your money in for decades, it's going to grow exponentially in the later years. But there's one key assumption that most people never realize. You can never take your money out of that. Everything that's generated in that must be reinvested in that, or that exponential line becomes a linear line.
Okay.
And most people forget that. Most people would never know that. So if you really want to be financially independent, it basically means an extremely hard and aggressive push to generate cash, and then to build wealth big enough that it provides, a regular, consistent income. And for many people, you would be talking about $1 to $3 million by the age of 60 or 70 to be enough that they could say they're financially independent. And most people are never going to get there.
Wow. Yeah. So that's really interesting, but yet we try. Okay, and that's the human spirit, and I see out of that sometimes desperation that a lot of people make the wrong decisions, join into the next shiny object syndrome, so to speak. Now, I've heard you say before that the best time to start investing is when you're born. Okay, so most of us listening in today probably would have passed that stage a little while now, but just taking that concept and I think my type of listener and viewer probably in their 40s with a family. So is it something that they should do for their kids? And if you could delve a little bit into the details, so to speak, does it mean that you need to invest monthly, yearly in what you call the index funds and the ETFs, which is what you recommend in terms of the stock market as a product, if you want to put it that way?
So let's start off with something that's gonna annoy the listeners. And that
Okay.
is what I teach in my course, How to Start Building Your Wealth, Investing in the Stock Market, is you won't get rich in the stock market.
Wow.
So let's start off with something that's gonna annoy the listeners, and that
Okay.
is what I teach in my course, How to Start Building Your Wealth, Investing in the Stock Market, is you won't get rich in the stock market.
Wow.
And because what I try to teach people is, if you look around the world at the
Hmm.
richest people, they didn't get rich in the stock market. They got rich from their business.
Mm.
There are a small number of people, surgeons and, professionals that are making big money, that keep their costs low. So there's two ways to create wealth. Number one, create a business and own majority of it and get the wealth that comes out of that. Number two, earn a good salary and keep your costs deeply below it. Every single month, you are creating wealth. Those are the two ways to create the wealth. Once you understand that that's how wealth is created, then you can look at the stock market as a place where you grow your wealth.
Okay.
So you create your wealth and then you grow your wealth in the stock market. If you go into the stock market with that
Mm.
mentality, that's the way that you can do it. Now, remember, I'm talking about a beginner.
Yeah.
There's a person out there, they've invested thousands of hours and they say, Andrew, you're bullshit. I don't want to hear that because I picked
Mm.
this stock and it went up and I did this and I do that. Yeah. Go ahead. Have fun. That's okay. But that's not the audience I serve. The audience I
Okay.
serve is people that are asking the questions that you're asking. So first thing, know that we create wealth outside of the stock market. We grow wealth in the stock market. So if we understand that, and then my audience is people who don't have any skill in the stock market, the
Hmm.
best thing to do is pick a fund or an ETF. Basically, they're two of the same things, but let's just call it a fund. You pick a fund that owns every stock in the world.
Wow.
There's a fund by Vanguard. You can go on their website and see it. I don't have any affiliation with it. It's called a VT fund. Just go on the
Hmm.
website, look up VT fund. It owns 8,000 stocks. Now there's 50,000 stocks listed across the whole world, but they own 8,000 of the biggest ones. There's no fund in the world that owns more that I can find.
Okay.
So, for the listeners out there that don't know where to start, either for their kids or for themselves, you can start today.
Mm.
Number one, go to a place like Fidelity, Vanguard, whatever. Look for the index fund that owns all the stocks in the world. Ask them, what's the minimum to open an account? Let's say it's
Hmm.
$100. Transfer $100, and then say, what's
Yeah.
the minimum that I need to put into that? Let's say it's $3,000. Put that minimum in. I
Yeah.
try to teach students in my course, take the baby steps, but take the steps.
Mm.
Literally anybody listening to this call could follow that advice and could start investing in the stock market right after this call. And that's the way to get started. And then you got to build from there. But it's a
Okay.
difference, if you're on the other side of the wall saying, oh, how do I start? I don't know. I'm afraid. It's scary. It's overwhelming. This is one way that I work with my students just to start. Later, you may be great at picking stocks or whatever. Great, do that. But for right now, that's the way to start.
Okay, absolutely, Andrew. That's superb information, and that's what our show is about. Because we know that people are busy. They have their jobs, they have their families, and it just takes so much time to do the research, to learn the skills. Because the number two issue that you spoke about has to do with understanding risk, and just the average individual, where do they begin to understand risk. So I think that your recommendation is spot on, which as again I said is this whole show is about, is to follow the people who have been there and done it, and you just don't have enough time to figure out everything yourself. Okay, am I right, Andrew?
I mean, that's what from my perspective, what I love about the podcast that I do is I get to meet people just like you're talking and just like you.
Yeah.
I met a guy that he said, we were doing the interview, and afterwards I said, what one piece of advice would you give me about Facebook ads? And I said, you should follow my toilet paper idea. I was like, well, what do you mean toilet paper? He says, I just come up with like 10 marketing messages about one product. and I put it on a graphic that looks a little bit like a background of a toilet paper, simple, you know. And then
Okay.
I run Facebook ads at $1 for each one of those for 5 days. And then I
Okay.
see which ones people click on the most to go to that product. And I know that that's the one that resonates. And I'm like, within a day, I was doing that toilet paper Facebook ad policy. And it was, you know, it cut through a lot of the complexity. And that's, like you say, it's what's so great about podcasts and being around. You know, right now I've been forming a mastermind group for 2021 with CEOs and executives. And it's a small group. And the objective really is, you know, you've got to commit to helping the other members,
Mm.
where each member who has a challenge that they're trying to overcome, like they want to cut their costs, they want to be more efficient, or they want to get online, or whatever that is, chances are one of the other CEOs has already been through that. What
Okay.
advice can you give? How can you help them accelerate? Which is the key from my perspective now. You know, time's ticking. I'm 55. I got a lot of things I want to do. I've got to figure out how to accelerate what I do.
Yeah, yeah, absolutely. That's great advice, Andrew. And there's some famous saying around that. You know, a fool will learn from his own mistakes, but you know, a really wise man would learn from the mistakes of others. And I don't know why I learned that, but I started to do that at a very young age. So you have interviewed over 300 persons, or at least you have had 300 episodes in your My Worst Investment Ever podcast. So out of that, you've been able to distill the 6 strategies to win. You want to share those with us, Andrew?
Yeah,
What are the 6
absolutely.
strategies to win?
And by the way, I think it was Otto von Bismarck out of Germany
Okay.
that said that a fool learns from his own mistakes. A wise
Okay.
man learns from the mistakes of others. So
Absolutely.
let's go through the, you know, so this is where the real value is. So
Mhm.
let's go through this. How do you overcome this, you know, this weakness of failing to do research? Basically, I just want to make it really easy. Get 2 blank pieces of paper.
Okay.
At the top of each paper, on the top of one paper, write down return or gain, right? What we're talking about. And then get the second paper and say risk. And then sit down with your idea. You want to start a restaurant, you want to invest in this, you want to whatever that idea is, and write down your ideas of what your returns are.
Mhm.
And then at another moment in time, maybe take a break, have a cup of coffee, come back, and then write down what are the risks. Separate your research from risk from your research for return.
Okay.
That's a big lesson that I learned. And you don't, you know, I think that you don't have to do a huge amount of risk, but if you
Mhm.
just, or sorry, a huge amount of research,
Mhm.
if you just do what I just said, you're already doing more than many people are doing. So that's number one.
Yeah, that's
Number,
that's that's really interesting because yeah, I mean because are you getting at the fact that you know if there are articles out there and maybe someone has an agenda, maybe that they will give you all of the upside and minimize the downside. So you want to research your risks separately from the gains. Wow, amazing.
it's valuable. And Shane, I'll tell you the way a good story about this was, so I have a coffee factory in Thailand, which we've had for 25 years. And my best friend Dale runs the coffee factory. And he had an opportunity come to us to expand to Vietnam.
Mhm.
It was exciting, challenging, a great opportunity. So he said, look, I'm going to do all the research on this and then I'll propose it to you about, you know, what it is. So he went to Vietnam, he met with the different players, he interviewed everybody he could, and he came back and he gave this really great presentation about why this was, you know, what he thought the upside was. And my job in that one was just to really understand the upside. And
Okay.
he and I had agreed that the following week we would have a meeting about the risk. And so the next week we went through all of the risk factors. And the separating of looking at the return from the risk is so powerful because, you know, what would have happened is I go, yeah, but what about this? What about that? And it would have just destroyed
Yeah.
the discussion of the return. We wouldn't have
Mhm.
really been able to understand the return because we wouldn't even gotten into it. And
Okay.
the second thing is it's kind of crushing, you know, for a person that's doing the
Yeah.
research. So give some respect to that research and then look at the research on risk. So that's a great, in the end, we decided not to go into Vietnam in this particular way, and we pull
Okay.
back. And it was really that second meeting we had about risk that got us off the track. So
Okay. Amazing.
that's
So that's number
the
one.
first,
Yeah.
yeah. So now the next one we say is fail to properly assess and manage risks. Now this, what I want you now to do is get take that paper of risks that you've written down, the different possible risks, and I want you just to write down the probability of that risk happening and the severity of that risk.
Mhm.
So probability, from 1 to 100, 100% sure it's going to happen. 1% means, it's not going to happen. Now, of course, you've got to separate your research you're doing on risk, or else you're going to be caught up in all the return stuff.
Yeah.
But then you also have to think about the severity. If this risk happens, how severe is it? Well, you lose all your money and your family goes, bankrupt.
Mm.
So really, probability and severity are critical. And this works in business too. We use this in our coffee business. We sat down with the management team and we said, what are our biggest risks? And we identified that we could be losing one of our biggest customers. And we said the probability of it is 60% and the severity is 80%, like
Yeah.
really, really severe.
Yeah.
And immediately we developed action plans. Even though we had some other risks that were higher, the severity was less. So we didn't focus on it. So probability and severity for your risk.
Okay.
Now, the next one is, how do you overcome the problem of emotion and flawed thinking? Michael Gerber, in his great book, E-Myth, talked about the entrepreneurial seizure, when you're so excited
Yeah.
about, your idea that you get lost in it. You get so excited. So the way that I recommend that you overcome this and you try to offset this is find, explore, and list out opposing views.
Mm.
That
Yeah.
is critical. And discuss those opposing views once you've got that list with a knowledgeable
Mhm.
and objective person.
Wow.
I mean,
That's
you'll
pretty hard to
overcome it.
find, Andrew.
Yeah, but
Yeah.
well, just think about what you just did. You
Yeah.
just did that, right? With
Yeah.
Robert's message,
Yeah.
you discussed it with a knowledgeable and objective. I don't know
Yeah.
Robert, and I don't know
Yeah.
your situation and all that. So
Yeah.
you did it,
Yeah.
right? So
Okay.
simple,
Okay. Yeah.
discuss it with a knowledgeable and objective person. So let's go on to number 4, misplaced trust. Get to know the person you're investing with, and remember
Mhm.
that trust, there is no, everybody's out there going, oh, the secret, the hack, the this, the that, the shortcut. No, there is no shortcut to trust. Trust is only built over time.
Okay.
Get to know the people that you're investing with. And that's critical. Most people don't even think about that. They get a sexy idea sold to them, and then next thing you know, they're gone and their money's gone.
Okay.
Number 5 is fail to monitor their investment. So if you're going to make an investment in your friend's restaurant, you need to follow a predetermined
Mhm.
monitoring process. Just tell them, the last, Saturday of every month, I want to talk to you for an hour,
Yeah. Mhm.
and get him to commit to that before you give him the money. And, in that discussion, I want to know the financials and what's happening. And I want to know, what are the issues, that type of thing.
Okay.
And then the final one, for invested in a startup company. This is a hard one because everybody wants to do their startup business. So my advice in this case is start from this reality.
Okay.
You are likely to lose everything. Startup company is not like a typical investment. It is binary. It's either all or nothing.
Okay.
And those are my strategies.
Okay. Okay. That's really awesome, especially for the times that we are in, Andrew, because specifically I wanted to ask you about that, the whole startup boom that is happening right now. And what are your thoughts on like crowdfunding and that sort of thing? Seems to be a thing right now, and really intriguing to me. I heard someone who I considered an expert, he said that, I believe when Uber stocks when the IPO came out, some of the financial companies, because he's well known, approached him and he said, I would not invest because I'm looking for very high returns, and it will be take a great job from the management of the company to sort of double what they're doing right now, because they were at a high at that point in time. So what he was saying is, I'd rather get into these startups where I could have 30,000% return. But he is at a different place, I would say, from
Yep.
a lot of people. But I thought that was a really interesting concept that I didn't think about, because I thought that it's just like Apple, the average person is like, yeah, Apple stock would be good, Uber stock would be good. So what are your thoughts on that, Andrew?
So,
Mhm.
imagine a Martian came down from
Mhm.
Mars and they went on the freeway and
Yeah.
cars were racing by. And the Martian waved down somebody
Mhm.
and they stopped their car. And he says, I'm a Martian from Mars. I've never driven a car before. Would you mind if I drove your car? And the guy said, no problem. And he gave him the keys and said, go on in. He said, there's the gas, there's the brake. So the Martian gets in the car, puts on the gas, goes to top speed. He's flying down the freeway, whizzing by all of these cars. He loses control of the car. He smashes into a bridge and he's thrown from the car. He splats on the side of the bridge and the Martian is no more. What did he miss? He didn't know about a seatbelt. It was right there.
Yeah.
It was right there. And basically, the lesson to learn from this story is that you are not rewarded. You are not protected
Mm.
by mistakes that you make,
Mm.
particularly mistakes that anybody could have reduced the risk.
Okay.
So what the first thing is that most people go into investing not realizing that they're exposing themselves to a tremendous amount of risk.
Okay.
So that's the first thing. I think the second thing is kind of what you alluded to. In my course, I always tell my students, they have to sign a disclaimer to say, I'm not your
Mm.
advisor.
Right.
I'm
Yeah.
providing you with information. You're going to make your own decision. If I was your advisor, I would be asking you questions like, well, how much money do you have right now?
Mhm.
What are your assets? What is your plan for your family? What if something happened to you? What ongoing revenues, pensions, government, whatever it is. And then from there, we would determine, what your situation is. But for most people, I would say my advice would be build up $300,000 in an index fund.
Mhm.
And then once you've got that, take 10,000 and play in your
Okay.
friend's playground.
Okay.
And most people say, holy crap, I got to build up 300,000. I'm like, yeah.
Yeah. Yeah. Okay, that's amazing. And that little bit that you put in there, Andrew, if you were someone's advisor, those would be the questions that you would ask. And that is so important, because we have a lot of people called financial advisors, but at the end of the day, most of them are typically trying to sell a product. Okay.
Yep.
And they tend not to ask you those rather important questions. So how do we find a good advisor?
That's a critical question, and it having the name of a big bank as an example,
Mhm.
it seems like it should protect you, but actually
Yeah.
it's probably worse. It's probably
Mm.
worse
Yeah.
because big banks are just selling their products. That's what they're doing, those advisors. It's
Yeah.
very hard to find an independent advisor. And, I would say if you can find a fee-only advisor, that's one
Mhm.
way of doing it, where you pay them a fee to
Yeah.
help you to set your plan, and
Okay.
then you're on your own. Or you have a follow-up with them on a consistent basis. But also, from an ethical perspective, uh, what you need to understand from every advisor, and you can ask this question, do you earn any commission from
Mhm.
any of the recommendations that you give me?
Yeah.
And I'm a
Wow.
CFA charter holder, chartered financial analyst, and I was president of the CFA Society in Thailand. And one of the ethical guidelines is that we're supposed to tell people about any fees or
Mm.
arrangements like that before they invest. So
Wow.
you have a right as an investor to ask that person, do
Mm.
you earn any fees or commissions on the recommendations that you're giving me.
Okay.
Now, if they do,
Yeah.
that's okay. I mean, commissions is part of life to sell anything.
Yeah.
But if you can know it, yeah, they say, okay, yeah, I work for Citibank, and if I recommend a Citibank product, I'm going to get a little bit more commission than if I recommend another one. Okay, great. If I know that, so that's the first thing is we don't need everybody to be completely independent. We just need to understand. But the second thing that I teach people is, look, let's say you're 30 years old, and you plan to retire when you're 60, and then you plan to live till you're 90. We're talking about 30 years of managing your money to retirement, but remember, you have to manage your money during retirement. That's another 30 years. That's 60 years. No financial advisor is going to take care of you for all that time.
Wow.
So I really challenge people to take care of themselves, and you actually can when you follow a simple program like the one I teach, or there's plenty of others out there, or you can just go to a company like Vanguard. Vanguard is unique because the profits that they make go, they basically get paid out ultimately to share to the mutual fund holders. So you get the benefit of the profits there. So I like that company, but you could do it with Fidelity or any other one.
Okay. Primarily talk about the stock market, and you have ready to invest stock portfolios, for example. But other than stocks, what is good to invest in?
Well, I also have a strategy that I sell, and I sell this through a few different channels. And basically, it's a global asset allocation strategy. So,
Okay.
and that's kind of what I teach. What I teach in my course basically is to own a stock index that owns every stock, and a bond index. You can add in some gold. You could add in some property. You could add in some commodities or something like that. Those are complexities that don't really matter that much. What matters is you have exposure to the stock market, you're contributing over time. But generally, that's the other type. And for most people most people shouldn't be picking stocks.
Yeah.
They should be owning a different asset classes depending kind of on their age. So I usually say 110 minus your age. So if you're 30, 110 minus 30 means you should have about 80% of your money in the stock market.
Okay.
To keep it simple, the other 20 could be in the bond market or in TIPS bonds that protect you from inflation. But, it could be in gold or some other things. There's other options. But make sure that you've got market exposure that you're building and adding to over time.
Okay. Could you explain a little bit more about that market exposure adding over time? Just break it down for us.
So sometimes people listen. Somebody listening to this could say, "Oh, great! Andrew said, put money in this ETF or this fund, and it owns every stock in the world. I got $300,000 in my bank account. I'm going to put it all in today."
Okay.
Follow what Andrew said. Don't do that. Don't do that.
Okay.
Because then you run the risk of what I would call price risk, that you've just bought at too high of a price.
Okay.
What I would say is that, look, research what I've, on your own, research what I've said. Then build your position in that ETF or in that fund that owns every stock. Build that position over time.
Okay.
And I've already said at the beginning of this, start with the minimum.
Okay.
And then slowly contribute. Because if you took that money and you divided it up equally over, 2 years, and you got that money in over 2 years, sometimes you'd be buying when it's high. Sometimes you'd be buying when it's low. Sometimes you'd be buying when it crashes. Sometimes you'd be buying at its peak. But those things won't matter when it's a small amount you're contributing every month, 30 years from now, 40 years from now. Those things won't matter. And I've also done a lot of academic style testing of that to be confident to give that advice.
Okay. Wow.
So it's a lump sum is what you have to be careful about.
Okay. Okay. Got
lump
it.
sum, just listening and go, oh my God, I got $100,000. I want to get market exposure, meaning stock market exposure, following what Andrew says. You could be buying right at the top of the market.
Yeah. Okay. Yeah. Got it. That's really good advice there, Andrew. Because a lot of times you hear a lot of people, sort of they get good advice and they want to jump in because it sounds so good, and problem number three with the emotions kick in, and it's
Yeah.
like, oh yeah, just jump in and throw all of it. So that's really good, guys. You are getting a treat today with Andrew. I mean, such good advice, such practical advice, such good advice that you could actually, well, information. Okay,
Mm,
just a little disclaimer here. Okay, that this
yeah.
is information that we are sharing and should not be considered to be advice. So, just a couple more questions, Andrew. There's a lot of talk about downturn and recession, but life is really a set of ups and downs. But how can people sort of bulletproof themselves for the downs, so to speak? Is what you've shared with us sufficient to work for the downs or any recession that is happening right now or coming up
It's a good
shortly?
question, and I think that, it is a challenge, and having this particular crisis has tested what we
Mm.
used to think could protect you from the downs. We used to
Okay.
say have 6 months cash in your bank account that could cover
Hmm.
6 months worth of your spending. For
Yeah.
some people, they're already 12 months out of their job or whatever
Mm.
it is,
Yeah.
right? So, the first way to protect yourself to downturns is to have cash.
Mm.
That's key. Number
Okay.
two is to have multiple sources of income, which is
Hmm.
hard.
Hmm.
When I was an analyst and working full time as an analyst, I invested 50-50 in my coffee business with my best friend. He built it and ran it while I was running, my job as an analyst. And then over the years, I created online courses and other things that bring me multiple streams of income. Because any one of those now, we can see things can be shut down.
Yeah.
Half of our revenue was supplying hotels in Thailand, and boom,
Yeah.
for the coffee business. So I would say that that's the other one. And for me, I would also say that, education is the main investment.
Hmm.
And
Hmm.
I've had this in 2020, I think I've had 100 interns that have worked with me
Wow.
because I decided that, many young people aren't going to be able to get a job. I can provide them with an internship, with an opportunity. I can give them a lot of benefits from that, and they bring benefits to me. And I always ask them the same question: do you have any skills, like
Mm.
any one skill that's really good that I could put to use?
Yeah.
And the answer is always no. We
Wow.
leave university with really no skills. We leave with, reasonable knowledge, but no skills. So the
Mm.
other thing I would say to bulletproof yourself is you've got to go deep into one area and build a skill in that
Okay.
area. And that
Okay.
skill, as much as you can tie that skill to helping other people generate revenue, you're always going to
Mm.
be needed. You're
Yeah.
always going to be needed.
Yeah, yeah, that's super important, Andrew, because again, especially at this time of the year, the start of the year, everybody is, thinking about, what do I do next? How do I improve my financial situation? And a lot of times people are looking for an investment, but you're so absolutely right that, the first thing really to generate the income to be able to invest and grow it is about really becoming specialized certain business skills, influence skills that you talk about, presenting skills, sales skills. Are those some of the critical skills you see, Andrew, you would recommend?
Absolutely. Yeah, and I
Mhm.
I want to tell you a story of one of my podcast guests. He was
Okay.
in Cambodia and he thought he's going to sell wine in Cambodia and he's going to
Okay.
import wine from around the world and sell it. So he started his business and he went through all the trouble of trying to import, get the licenses, and then trying to sell, and ended up he failed. And his
Mhm.
and I asked him, how would you, what
Mhm.
advice would you give? And he said, if you have an idea for a business, start selling today.
Mm.
And I was like, well, how can you sell if you haven't even imported your wine? You need
Mhm.
to set up your wine business. You need to
Yeah.
get that wine in the country to sell. He said, I should have just gone to a wine company that's already importing
Mm.
wine and say, hey,
Mm.
I'll buy a pallet of that off you and I'll sell it.
Mhm.
And I was like, damn, just start selling
Selling.
first before creating. And I just put up episode 300 on my worst investment ever. And the episode, I call the episode 49 Incredible Life Lessons I Learned in 2020. from
Okay.
26 extraordinary people. And one of them is John Lee Dumas from Entrepreneur on Fire. And one of his lessons, he says, before you create something, get proof of concept by getting a few people to buy. So there we are. We're learning from the mistakes of others.
Yeah, absolutely amazing, Andrew. And so you've been sharing, great information with us, and you've been doing this for years, I'm sure. What are some of the typical mindset challenges, mental blocks that prevent people from taking action? Although, I mean, you're sharing absolutely great information. What's that final piece of mental, getting over those mental blocks to take action you would share? What have you found that worked that maybe
I,
someone listening says, yeah, this sounds really good? Because
so
I remember, um, because I grew up in a poor family, I became a saver. I had good taste. I think I don't know where it came from, but I didn't always have the money to buy it. So what I would do is I would save my lunch money or my juice money or my drink money and save it up and to buy something that I really liked, because I didn't like what my parents bought me. So I became a saver. Okay, and I remember going to a seminar in New York City, and the person shared a concept with me that made a lot of sense, rocked my world, because they said, why save something that goes down in value, because that's what happens with cash. But yes, I understand we need to save and have a certain amount, for example. But I remember, walking out of the seminar, it was so real to me in the lobby, and all of the stories start to come in. I need to save that money, because they gave some options, including the stock market. What if
right.
something happens to your parents? What about the rainy day? And years passed and I didn't do anything. And I think this is very typical of people. There's information all over. So what would you say to people?
So I spent years when I was younger reading every book on time management. So I
Mhm.
really, literally, on habits and all of those things. And I started using Excel, and I started kind of making my own planner book of the way I thought. And over time, I started printing that out. And over time, I created this book called
Plan your
Plan Your
work,
Work, Work Your
work your
Plan.
plan. Okay.
And I don't even really publish it or sell it. I print it out for myself because
Mhm.
it's my system. But I would just highlight in that system, the first thing that most people never do is set a clear goal. And I have a system in there where we set up 10 steps to get to that goal. Force
Okay.
yourself to write down the steps. Most people just never do that. So that's a
Mhm.
starting point, number one. And then I'll just say one other thing. I mean, I'm not an expert in this. There's many great books out there. I just know what works for me. And mine, what works for me is, I'll call it, get your ass outside the door. What do
Okay.
I mean by that? What I mean by that is, I've found for me, the hardest stuff that I got to get done, I've got to do in the morning.
Okay.
The stuff I don't like to do, I've got to do in the morning. I just don't have the mental energy to keep myself focused on it in the afternoon or evening. Pick your time. Mine's the morning. So therefore, the hardest thing, the thing that I don't really like doing, is exercise.
Mhm.
So my job when I wake up is to get my shoes on and get my ass outside that door. If I
Okay.
can get on the other side of my door to my apartment, my house,
Mm.
wherever you are, get on the other side of that door, then you've
Mm.
made 90% of it. It's never a problem. I get out, once I'm out that door, then I just go
Oh,
walk
well.
in. I go to the gym, I go to yoga class, but gotta get out to get your ass outside that door.
Absolutely. It's been an amazing chat with you, Andrew. So much great information, but there's obviously only so much we can do during this interview. So where can people find you and get more information on all of this great stuff that you have to share with us? Where can people find you?
I think the easiest way is just to go to LinkedIn and look for
Okay.
my name, Andrew Stotz. You can look for my Worst Investment Ever podcast, and add me there, and you can send a message there. And what I'll do is, I'm gonna create a 50% discount for my course, How to Start Building Your Wealth Investing in the Stock Market,
Okay.
for the first, let's say, 20 people that come from your show. So
Okay.
if somebody comes to me and you just tell me that you heard about it here, I'll give you that discount. And there's 100% money back guarantee. So if you take it and you don't like it, just let me know.
No. Okay. Wow. Wow. That's a treat to end off today's interview, Andrew. Really, really appreciate it, and happy New Year to you. Good luck in everything that you're doing. And I just want to say, I'm always so pleased, happy, thrilled, heartwarming to see, you and your mom and how you take care of her. I just want to say that publicly. What a great example. So thanks again, Andrew, and all the viewers. Remember, you're born for greatness. Don't settle. Go for 10.
Go for 10. I love it. Thanks, Shane.
Most welcome, Andrew.